Good morning, this is Zach of All Trades again. Anyway, I get asked a lot about my impression on the markets, what they're going to do over the next few months, things like that, particularly since I've been back here at the States and I can speak to people that speak English fluently. Um, over the years, I seem to have gotten over the past year, I've seemed to have gotten a couple of people that call me from time to time and ask what I'm doing. So here's my current sentiment on the markets, at least over the next month, maybe as much as 3. Um, Probably more the next month because Christmas season is coming up. What I have here is the S&P 500. I use it more than the Dow Jones Industrials because there's more stocks in it, and these things are meant to reflect market averages to give you an idea of the direction of stocks in general. So of course, the more samples you have, the better data you have. So I'm looking at a long-term chart here. This is monthly. Where the cursor is now is where it peaked back in 07, and this is the bottom of what they call the financial crisis. And then it continues up to where we are today. My general impression here, looking at it right off the bat, is most likely this is going to be a wave 1, a corrective 2, and then we're going to come up into a 3. I can't quite decide if this is a long running 2 all the way up to about right here or not. However, let's start back to the basics of my system here. We have the monthly MACD, and I used the parameters of 5, 34, and 5, which I picked up from a Russian Forex trader when I lived in Russia. And here's the last high at 2019-26. And as you can see down here, the MACD has a very mild divergence. I don't think this is enough to completely reverse the trend, but it is due for a real correction. Again, looking at Elliott's wave theory, and this is something that it just takes a lot. I've been working with it now for several years, and what I've learned from it is it's a general rule of thumb. It's not something that's absolutely precise. It's just something to give you an idea of how the market's going to move. So if this turns out to be a number 3 running up to here, we just ended and we're starting a 4 now. Elliott wave theory says that wave 4 of the parent wave tends to fall into the wave 4 of the third wave, which based on this I'm thinking is right along in this area here. Just to take a look at it and see, cross-reference it if you will, I'm going to compare it to the Dow Jones. Now I do use the Dow Jones, but mainly just to confirm what I'm seeing in the S&P. And I've already worked this chart up, but what I'm looking at here is this looks like wave 4 to me. So I'm going to go back over here, see if I can keep the chart I've got so I can work it up. Yep. Okay. Now I already have one of these charts worked up, but there's so much noise on it that I might as well just start from the beginning for demonstration purposes. Oh, always something getting in your way trying to sell you something. Okay, so we have it now. We have it now into the editing version of stockcharts.com, which is what I usually use. I do not go in and out of trades on a daily basis, so this works just fine for me. Well, I take that back. Occasionally I do. All right. Starting at the top of my system here, MACD has divergence. STO has monthly divergence. Relative strength is coming out of the most extreme areas. And there is some drop in volume as it gets a little bit higher, as it makes that last peak. So, from this point, I would take a look at some patterns, particularly from this long bottom, to see if it makes sense that we may be entering a corrective number 4 to the current trend. Now, in my experience, you get a bottom pattern, usually a head and shoulders or a double bottom. That target is where 3 usually ends. So Let's take a few looks here at where it could be. It looks like this line would be better off coming off of here with the beginning of the shoulder. If we raise it up to its most extremes there and back this up a little bit, you can see that there is some zigzag action here, so it makes that line look kind of valid. Get in here and take a closer look. It looks like I need to lower that a little bit. So yeah, we're looking at ballpark right along in there. Now, I don't like to measure to the extremes in all cases, so I've got two taps right here where it opened and closed for the month. And that's where I'm going to draw my line. That appears to be straight. I'm also watching my son Ian. That's what's going on here. So, the breakout would be along this point here. So we definitely have some reaction there. Taking a look at it, that would be one possibility. Do have a little bit of volume going on here. How about we take another view at where it could be. This would be another option right here, which, voila, that is where we're beginning to have trouble. I'm beginning to get reversal signals. Now, as it breaks up through here, yeah, there's a little bit of volume expansion there. It looks like volume really begins to take off here, according to the Calkin money flow. So on these breakouts of possible patterns, it looks like this area here would be the most valid. So cross-referencing what I know of Elliot's wave theory with my pattern analysis here, I'm just going to go ahead and declare, for my own purposes, that this here is the end of number 2. 1 is either here or here. So that would mean we're coming up with 1, 2, 3, 4, 5, corrective 2. That looks like a jumbling of 3 there, and then a 4 in this area or this area. If we back it up a little bit, it's completely possible that this is another extended 2. 1, 2, 3, 4, 5, correction there. So we're looking at 4 being either in this area between, oop, I forgot to change my thing there. Oh, I got somebody that needs to burp. Just a moment. Alright. I heard once that men are not supposed to be able to multitask. Yeah, I believe that. Oh, there we go. Oh. Unfortunate, no spit up behind it as of right now. Okay. So I got 2 probable places that there could be a number 4. Let's segment this down. There I go again. Using pattern analysis at the end of where I believe number 2 is, we have another potential pattern here that might give me a clue on where the subwave 4 of 3 is. Got somewhat sleepy too. So let's take a look at that. Probably from about right there, because we also have a moving average in the area. Oop, a little crooked there. And it would look like the break would be about right there. So then again, it looks like it's going to fall between these two, which is a lot of help for me, isn't it? So 1 and 2. There's another potential pattern here that it could be. I treated that as a head and shoulders. The head and shoulders typically is a bottom pattern, and from the time frame that we're looking at, that's not the bottom. The other pattern could be a potential cup and handle. It's got a little leery of it because it's got a bit of a V shape here. So let's look at the volume down here and see where it took off. Kind of drags down and it takes off again around about the start of the year there in 2013. Yeah, that looks like the most likely break point. And we got a visible rise in volume. Okay. So we're just going to have to take a guess. I have my suspicions that this is probably wave 4 of 3. And it's kind of a jumbled mess. I'm going to flip back here and take another look. That's your base. Yep, that's the Dow Jones. This is the area on the Dow Jones that I had marked as being a number 4. And that right there looks like an extended flat. What time frame are we looking at here? That's May of 2013 to October of 2013. Here we have May of 2013, September, October. Okay, so I'm going to count this as wave 3. So this is the zone that I'm looking at for it to come to. Now, is there any cause to believe this? Well, we do have a divergence on the monthly chart. Midway of the month is threatening to come out, which would be a major sell signal. We have a simple divergence here, and can't quite tell if it crossed over for that month yet or not. In either case, the indicator is so far deteriorated here that I don't see much of a chance of it pulling out of that, given the condition of it at the moment. So, let's see here. Next thing that I would do, I have a suspicion of where the waves are, and for my purposes I'm using this. I'm going to come up here and see if I can find out where some common retracements are. This is using Fibonacci ratios. Might be a little off there on that, but it doesn't have to be totally exact. I'm going to change the color of that so it stands out a little better. Okay, I would say that's a pretty significant retracement for what I'm calling a third wave. There is 38.2%, which is quite significant using Fibonacci ratios. So another thing that I'm just looking at here, this right here looks like the third wave, possibly this being the first. So how about we take this and try a plan B possibility of retracements. Because if you recall, whenever we looked at the Dow Jones, it appeared that this entire thing here might be a corrective wave from about this point here on up. So if that's going to be a corrective wave, no, I don't see much in that. So from there to there, do we have another overlapping one? There's 38.2% here. Next one will be 50%. So we've got two at overlap here, and down here even a third. That would be 61.8% or 50% And also notice, this is pretty significant, the 50-day moving average, this blue line coming through here. It'll take a lot to get that to downtrack. However, by the time that we work through, say, a 2-month correction, most likely this is going to be in the zone of what I'm thinking is the 4th correction. Okay, I'm going to get rid of that one, the one I just put up. Okay, so I got an idea how the waves are moving. Got my reversal signals. At this kind of chart view, not really much to be optimistic about. There I go with the lines again. There does seem to be somewhat of a support area right here. That's probably what this is reacting with. So we might get a little bit of a slowdown. But the last time that I looked at the markets, it didn't seem to have much going on today that you could be optimistic about. So I want to confirm that there has been a trend line break. Again, dealing with this being a number 3. Not real sure where the number 3's 2 started here. So let's take a more conservative view of how the trend line would be. What was this low? This low is 1074.77. Looks like 1073 is going to be as close as I can get to it. So if you look at that, I would say that is a trend line break. Let's make that one a green because it's a positive trend. We're still in the month, so the volumes, the verdict's still out on the volume at this level. Okay, so at the moment, as looking at a monthly chart, short term, over the next couple of months, I'm bearish on the markets, which would, if you've seen my other video, let me explain why I'm looking to short EA Sports and why I did a short last week before I started making videos on GM. Okay, so we're going to upload that. I'm going to rename this one STR for strategy, and voila. This thing's loaded up now. Alright. I do have several charts of this, but let's see here. The thing I'm mostly focused on at the moment will be from October 2011, so 3 years. I'm going to overshoot it just a little bit for the weekly charts. So we can cut it down to, say, 3 years, 4 months. Okay, first thing pops out for me here. Midway of the week, and it's already fallen below its 50-week moving average, which I would say is very significant. Remember, I was saying that a number 2 was back here in 2011. That's the last time it really cracked through it, so that's just, I'm thinking more, we're moving into a number 4 as of the moment. We have our divergence, we have high volume pushing it down. We have confirmation as it broke through the weekly chart. It's coming down to the oversold area now, which, if you recall from the other chart, we're coming to a line of support, and look at all that there, all that bouncing around. I'm thinking it's probably going to form some sort of a continuation pattern here, or it just could form an even larger top pattern. Very weak on the Calkin money flow, and it has lost its support on the relative strength index, which is another signal. Okay, so how about we pull this thing up and see what we might be able to expect. Okay, With this one, let's see here. This was at bottom, and I was calling it number 2. 1, 2, could be a 3, 4, 5, number 2. That could be a 3 with a 4. Again, there's that area. Let's just remember the cross-reference with the Dow Jones. It was roughly May until October. But taking a look at this, I might even say that it was here. Either way, we're looking for the zone. So I'm going to line out the zone that I'm looking for here. If I can get that thing to be level. You know what? I'll just use a different tool here. There we go. And it started there, right? Yep. And we got a lot of reaction here, so that looks like a good place to, probably there. So we're looking at that kind of zone. Okay. We have an idea of where the waves began and ended. So there's, oh, I got it this time, 74.77 up to its last high, which was 2019-26. And let's make that green. Okay, look at that. We got 38.2% running right through the zone like we did last time. All right, now let's go back to the lines here, draw up a trend line. $74.77. Let's see how they stack up on this one. That looks like a pretty valid line right there. I had a little trouble coming out of here. So maybe, by the look of this, it fell below what became the established trend line. This right here may be where your number 2 is in your third wave. Which, again, lends more credence to the idea that 3 ended on one of these peaks here. But then again, we would have to downsize it because we need to make sure that wave 1 is shorter than wave 3 because it's clearly an impulse wave. I would have to make several videos on how to do Elliott's wave theory effectively without getting lost in it. You can, particularly if you're like me and you like puzzles, that thing, it will suck you in really bad and you'll end up being counterproductive. Okay, so we have all of that. First thing that I see here is a possible top pattern would be something that looks a bit like a head and shoulders as just a start-off pattern. And based on what I'm seeing here, this looks like a classic head and shoulders volume-wise. Notice, let me get a different kind of line here. This right here is your first peak, and this is also where I believe wave 5 is, or begins. We have a decline in volume. Now, we come up here to about midway here. There seems to be peaking volume again. As the rally begins here at the beginning of April, there's a spike and then another lull in volume. As it gets up here where it starts tapping about the same resistance area, that is where you have a peak in upside volume, and then all of a sudden we have this happen. Where you get a climatic sell-off. And that was last week. It's pretty clear that volume is pushing the average down. So I'm pretty convinced, particularly being that it snapped through its line clearly and for sure last week, and we have a climatic spike. That is at the very least your short-term pattern for the moment. So let's try to estimate what we're looking at here. Alright, it's right on pattern target number 1. However, head and shoulders have a tendency, sometimes, particularly in bad sell-offs and things like that, they'll double their targets. And oftentimes these being doubled in targets will develop into other patterns to support that target range. So Should that be the case, that looks about straight to me. Oh, no, that line is not even close to straight. Let's try that one more time. Oh. If you notice, it's pretty close to getting to that zone now. Alright, I'm going to nudge these things over just a little bit so I can see what I'm working with here. Okay, should we end up with a bit of a pullback to test for resistance against this 50-day moving average, one pattern I might anticipate would be an even larger head and shoulders. Shoulders have a tendency to be about the same height, which if you take a look there, same height is going to be about the same there. And we probably have a line from about right there to right there, which from the peak there, should it break sometime in the near future, there we go, boom, right to a typical retracement, which is the typical retracement depth for an Elliott wave theory. And we have no reversal signals and confirmation that the downtrend is likely to continue. And here we are getting very dangerously close on a weekly chart to dipping under zero on the MACD, which is, for that indicator, confirmation that a bear market is beginning. If you notice here, the last time we did this and dipped under on a weekly chart was back here, which by my count, my wave count, was wave number 2 of the parent wave. So that is where I stand at the moment for the markets as a whole. The reason that I chose EA is because it is a consumer discretionary technology stock. Consumer discretionary tends to not only move as the markets do, but they also tend to move harder and sell off faster than the markets do. And the fact that there's a technology element there, well, any of you guys that were watching the technology bubble pop back in 2000, you have some idea of just how wildly those things can move. They're almost like commodity stocks, like oil stocks. They have a tendency to spike and drop. As far as what I'm going to be looking at whenever this correction ends, I use the Stovall sector rotation model. Not the one that you're going to find on stockcharts.com, even though you can use that as a general rule of thumb. It is valid. I use his version from his book. I will get more in depth with that with other videos here very soon, because we're going to start having monthly economic indicator data rolling in. As I do that, I'll make more videos to give you an even bigger idea of how I do my trading. I use fundamental data to get a good idea of where the market cycle is in relation to the economic cycle. And once I have that, I can cross-reference that with these things that I use, like Elliott's wave theory and technical analysis. Now, I wouldn't say I'm a purist for technical analysis. What I do is use it to decide which direction I'm going to trade, pinpoint entry and exits, and use pattern analysis for estimating my targets. Right now, I was talking about GM. That's another one that I have been following, but I have not been. I haven't made any videos of my analysis on it yet. Um, some targets. That's just off the top of my head, but I have been working on it quite a bit. I'm looking at GM probably falling somewhere around 27, 28 in the short term, and there is potential, particularly if this turns out to be a fairly long, drawn-out correction. There's potential for it to fall to about 23, 24. So of course that one is staying on my radar as far as shorts. As we begin to hit the bottom of this correction, things that I would look for to rally. U.S. Steel is one of them that I have on my radar and following. I would be looking at basic materials. I would be looking at funds for my long-term portfolio, retirement ones. I would be looking at funds that are in precious metals, things of that nature. Probably some bonds, but the bonds, I'm waiting for a bond sell-off actually, which I think will be coming very soon. Don't forget that the Fed is going to be pulling out of its quantitative easing supposedly this month. Based on what I'm seeing in the bond markets, it is beginning to wind down severely. Probably have the prices of them fall pretty soon, stretching out those yields, which will effectively raise interest rates regardless of what the Fed does, unless they decide they want to stay in the quantitative easing, which politically it doesn't sound like that they're going to be allowed to, or they won't be able to come up with a good excuse for it. So they're going to keep their interest rates low until they can't do it anymore. This recent collapse in oil prices and foods and things like that. Gold is one of them too. I'm watching for bottoms in those. They're not ready to get into yet, but I think they will be, or at least worth investigating after a good hard correction. At least temporarily. As this A wave of what I'm convinced is going to be a number 4 correction hits the bottom, that would be whenever I really begin to look at energy stocks, basic material stocks, like the ones that I mentioned, probably commodities, precious metals. However, a word of caution here. I'm going to be keeping a close eye on them. They had the rally in the last cycle. They're the ones that shot up extremely high. One good thing that has come out of all this Fed quantitative easing is it has spurred rapid production of these kinds of commodities that had ridiculously high prices from future speculation. I do not think that they're going to be breaking to new highs in an extreme case. I think oil can get back up there about where it was last time, and I think the price is going to collapse. Anyway, those are just some of my thoughts there, give you an idea of where I'm going here with it. Long term, again, I'm not an investment advisor. I've taught myself how to do this. I manage my own accounts. I enjoy doing it. That's one of the reasons why I share it. Sharing it this way, make sure that I buckle down and do everything correctly. Otherwise, I'm going to embarrass myself on the internet, which I don't want to do. And you know, everyone likes people get interested in this, and the following builds up. Might see if there's other opportunities with it. However, at the moment, I'm bearish on the markets. I think the Fed's going to be very hard pressed and pressured, given their current philosophy of the economy not being as good of shape as they believe that it should be. I don't know where they're getting this from, because every target that I've heard of as far as unemployment and production and things like that, all those things have been hit, but they're still looking for excuses to keep the interest rates down, which I think they'll clean any excuse to keep interest rates down until a massive rally begins in oil and they run out of excuses. It's one of the reasons why I think oil is probably going to be hitting that $140 to $150 a barrel mark. And keep in mind, I'm saying this while it's in a sell-off. All the factors are there. I looked at the oil chart yesterday, I believe it was, and some of the pressure, the selling pressure, is beginning to wane. So if it kicks off into a full rally into oil, that's probably going to be where the Fed finally says, okay, we've got to raise rates, and they're going to do it. It's going to be too little too late. They're going to cause this number 4 correction to be even worse. But the good thing about it, once the oil prices collapse, that's going to skyrocket the economy, and I'm looking for a nice healthy rally to new highs. But I wouldn't be looking for that to even begin to start until about this time next year. I'm not very optimistic for the next year. And also, listening to all the news coming out of the Fed and everything, people are talking about mid-summers where they're going to need to raise interest rates. Well, based on my experience and my kind of guesstimated judgment on where oil prices are right now, it will be probably springtime, around about May, that it becomes crystal clear that something needs to be done about commodity prices, particularly if they're not depressing bond yields anymore. Anyway, all right, that's my 2 cents on it. As I said, I am not a professional investment advisor. I'm self-taught. If you lose money based on things that I've said here, you know what? You're an adult. You need to take responsibility for your own. However, I believe just watching here and give you a good idea where to start if you feel like that you really want to manage your own accounts and be serious about it. Okay, till next time.